Welcome. In this video, we're going to go over how to find probable targets. Now, this is a hack to find or identify structure. What it is that within an impulse, if you have any candle that is not related to the move, that candle will act as a structure candle. And if it gets tested, it should stop the market for a brief moment. Now, let's add that and keep going with what we've been talking about. And that's how to use a daily time frame to find the best setups. If we hop over to the charts, we can take a look at this EURUSD example, and we're just going on the daily time frame. So we're not going to do a full multi-time frame analysis like we normally do, but here on the daily I can identify two patterns. Here on the daily I can identify two patterns that correlate with themselves. Just looking at this market on the daily time frame, I can identify two patterns that confirm themselves. I can identify two patterns that confirm each other, and with this information I can use that to help me make a trade on lower time frames with high probability. What are the patterns? Well, if I do pull out my tool, we can see that we have the left shoulder here, the head, and what would be the right shoulder. And then as well within this, we have a nice and easy impulse where we just want to see a retracement for the continuation of the trend. So we have two patterns that are confirming themselves that we want to see on higher time frames, and we can take this information, simply put that we want to see the market come right in here, because adding what we've already been talking about, we have a candle that is not related to the move. Let's clean this up. What are the patterns? We have a left shoulder here, a head, and a right shoulder, and then within that we have a impulse where we want to see a retracement, and then another impulse continuing the trend to the downside, and this is on higher time frames. They're both lining up to have a push to the downside, but before we have that push, we must have a retracement, because the market can't move in one direction forever. It must ebb and flow. Now, if the market is going to pull back, where is it most likely to come to? Previous structure, right? We have previous structure right in here, and previous structure yet to be retested can expect to be respected. So once we get a move in here, we expect the market to continue to the downside. Let's start to add everything together, and we're still on the daily time frame. We have an impulse. We have a move to the downside. We have the most common pattern in the market that we like to see forming, which after this impulse, we want to see a retracement back to previous structure before the next impulse begins. We also have a potential head and shoulders that, if everything goes correctly and lining up with our retracement, we should have formed right in this area. Within this impulse to the downside, we have a candle of a different color that should act as structure resistance if retested. Next, we also have this daily candle that closed bullish. Now that's very important. And then as well, just to add some extra confirmation, if we do pull out our Fibonacci, jump in our toolbox, and we take our fib from the high to the low of this move, we see that the 618 golden ratio is lining up perfectly with the structure area that we want to see the market come into. Now that this daily candle has closed bullish and actually closed, we wait for the candle to close, we can go from the daily down to the 1 hour to look for a highly probable setup, because we know the overall big picture. We know the market wants to ebb and flow. We can't move in one direction forever. We must have a retracement. We can capitalize on that retracement. Now that we've dropped down to the 1 hour time frame, let's take a look at the setup that we did have. This is EURUSD. As you can see, it was sent out. We had a setup looking like this. Here's the signal, and this is what we were looking for. So if we do go over and look at the market, and we can understand why we were looking for this setup in more detail, we can see that we're just looking for the exact same thing that we always look for, and that is structure to confirm our directional bias in the way that we want to see the market. So we're starting to get a double bottom in this area down in here. The market is failing to break lower than this area down in here. So that's one good aspect, adding to as to why we want to see the market move to the upside. And if we just follow along with the market, we can see that the market pushed out of here, came back down, retested, created this double bottom. We started to consolidate in this area, so we had then created another level of resistance and a level of support that we were trapped in between. And if we could break out of this area, and not just a weak break, a strong break with a lot of momentum showing us intent and the direction that the market wants to go, we would then be able to look for an entry. Once we did get this break, what do? We then have a good place to enter in on the market. So what do I mean by that? We have previous structure resistance that should now act as support over on this side in order to enter in on this market, confirming the bias that we want to see the market move up in the only way that we know how. The only proven way in the market for the last 100 years is higher highs and higher lows. So we want to enter in on a higher low in order to see the explosion to the upside for a higher high to be created. Simple market structure. Once we identify a good place to enter in on the market, previous structure resistance, now turn support, we find a good spot to put the stop loss protected by structure. So we're down here amongst the lows, we're as well underneath all this area that we do not want to see the market break below, because if it did, did would not be confirming our bias. And then after that, we know we want to see the market move to the upside, preferably somewhere around in this area. We're just looking for a nice and favorable risk to reward, not being too greedy, because I have noticed once you get greedy in the market tends to humble you. So we're just looking for a nice and easy 2R risk to reward on this trade, going from where we put our entry and where we put our stop loss. Then we measure to our take profit and find that we have a nice and easy take profit of about 2R right in this area. And then from there, we let the market play out. So jump back over to it. You can see from this area, the signal was sent out. And then from there, we let it play out, go on about our day. We put our entry, stop loss, monitor it every once in a while just to see when to go risk free. And let's see what happens. Well, it went a little too fast. And let's see what happens. Market gets close to the entry, comes back, starts to explode to the upside, creates some break structure. We're going risk free, and then it goes on to hit the take profit. And as you can see, we had our take profit in a nice and easy area for the market to go ahead and hit. There wasn't a lot of structure. Actually, it was even more, if we wanted to be exact, even more previous structure. Support broken to the downside that we want to see act as resistance. And this is when you start to drop down on lower time frames, you get a little more detail so you can be a little more exact. But we found this area right here, and as you see, the market hit it to the T before retracing back to the entry and would have been stop loss. So was able to capitalize on that. But what I want to highlight is that once this market started to push up to the upside and break and create structure to the upside with a lot of momentum and velocity, that was when I felt confident that the market wanted to continue the structure. And if we do zoom in right here, we can see, look at how there is a bullish pattern right in this area. So we have a left shoulder head and a right shoulder, further confirming the bias, further confirming our analysis that we want to see the market move up to the upside, showing that even on the 1 hour, dropping down to the entry time frame, we can still find confirmations to add confluence to the trades for higher probabilities in order for us to find success in trading. Now, as you can see, this was a day trade for about 89 pips. Now, this is an example of a day trade that we take over here for about 89 pips in one day. These are the types of day trades that we take over here in the program. This is an 89 pip day trade that we took for 2R. If you want to know the exact details that I can explain in the videos over here on YouTube, click the link in the description and go ahead and join the program. I promise you won't be disappointed. I hope you have a profitable day on and off the charts. And until next time.